All right. Howdy, one and all. Glad to see you guys. See Michael, see John, see Zoltan. How you guys doing? I'm going to go ahead and mute your mics here. And once we get underway, we can go ahead and maybe open it up to question and answers right now. But let me go ahead and mute this one mic here, and this won't mute. Okay, there we go. All right. How you doing, ladies and gentlemen? Welcome to Elite Traders University presentation of the Pip and Run Boot Camp coaching session. And this is our weekly call that we have to go a deeper dive into the Pip and Run system, to answer any questions you may have, and also provide you with tips and tricks on how to maximize the Pip and Run system. Okay, and we're going to get started momentarily. I want to direct your attention to the risk disclosure on your screen to make sure you understand all there is associated with foreign exchange trading. And for those of you who don't know who I am, my name is Greg McLeod. I'm a 23-year trading veteran. I trade stocks, Forex, crypto, gold, silver. If it has a chart, I've traded. I'm the foremost authority of short-term day trading and scalping. I've spent 8 years as a currency analyst at the largest Forex broker-dealer in the world, FXCM. And I spent 16 years in public education. I hold a California lifetime teaching credential, and I worked at as a prop trading desk, at prop trading desk, and at Bank of America. And so I'm also published author and a bunch of stuff. You guys probably already know that. Okay, but in case this video falls into enemy hands that they may not know who this video is about or who, I'm just go ahead and stating that for you guys, okay? And so I hope you guys are doing well today. Nice to see all of you bright and chipper and ready to go for this week. And let's see, hello, Zoltan says hello to everybody, and a big howdy do to all of you from Dallas, Texas. With this, I get the scenery from New York City in the background to give us that Wall Street state of mind. Okay, and we are going to go deep, do a deep dive into the strategy. I want to welcome our new student, Michael, all the way from New Zealand. Welcome aboard. Welcome, welcome, welcome. I see John on the call as well, and I see Michael and John, like two kind of West people here as well. So if you guys are here, we probably won't do one at 9:30. Okay, so if you're going to be here for the entire day, they'll make it a lot easier. I'm trying to accommodate you guys. If you guys come to the 1 p.m. one, then we don't have to do one for 9, and Greg can get some needed shut-eye. Okay, so awesome. And I know I do have a topic in mind. I wanted to talk more about banker support and resistance, but if you guys have any other thing that you would like to go a deep dive in as far as your trading, feel free to go ahead and type something in the chat box. If there's something in particular you would like me to go over, if not, I'll just go over the standard fare. Maybe, or I know somebody had asked about the Elliott wave. If they want to go a deep dive into that, just the basic structure of what we're looking at in the market. But I don't see any excited hands in there. Hey, party! It's a free day. No, okay. Going. Forever hold your peace. Fire away, Greg. Okay, we'll go ahead and fire away. All right. Let me go ahead and give my famous whiteboard where I always start off with a sketch. The sketch of what I wanted to actually get going here. Okay, we were talking about patterns. I actually wanted to kind of like stay on patterns for a little bit longer. And the basic pattern that we're actually talking about. Thomas Bulkowski wrote, and this is a good quiz and a good review for those of you who are in the room, so you'll be able to answer my questions. Okay. What pattern has the highest probability of breaking out? And let's see who will be the first one. I'll call a quiz. Okay. The triangle. Okay. Good guess. The falling wedge. John! Score. All right. So the falling wedge. Okay. So a falling wedge is like, think down me as a triangle. looks like that, falling down, what will happen is we'll have price. I'm going to give my diagram on price, and we have these lower swing highs and lower swing lows, and they start to narrow and tighten and slow down. Basically, the momentum in the market is coming to a slowdown. It's trying to make these new lows, but it's unable to make them. And what happens is you get a break. And when you have this pattern, this narrowing pattern, Thomas Bulkowski in his book Encyclopedia of Chart Patterns says that it has, this type of pattern has what percentage chance of breaking out? Let me know in the chat box. 70%, right? 69 to 70%, 70% chance of breaking out, right? And usually has a target of the old top of the pattern. So a 70%, you have a 70%, something that has a 70% chance of breaking out. Okay, so you can place a stop below the low and play that breakout, and you have a 70% chance of it making it to the top of the pattern. Okay, and based on what time frame it is, the bigger the time frame, the more pips it is. Now, if you're looking at a 1 minute time frame, then maybe there's only maybe 10 or 15 pips in that, right? Maybe 1 minute, and you maybe like 10 to 15 pips, right? But if you're looking at something like a 4-hour chart, you may be looking at 100 to 200 pips or more, okay, for such type of a breakout, okay, and that's the I know Mike's having some little problems with that. We're going to try to iron that out. Is FIDO, Fine Indicator Divergence, actually finds and locates that pattern, and because it's such a high rate, if you can eliminate the other patterns which kind of suck, because he has those Encyclopedia of Chart Patterns. It was a great book, right? But only about that many patterns actually have high enough percentages. Like, why even care? Why learn what such and such a pattern is if it's not going to give you 70%, right? And if it's like high stakes poker, it's like a pair of aces. I always look at it like an ace. I said, oh wow, pocket rockets. When you hold if you hold a pair of aces, when you're playing poker, you have a high chance of winning. It's the highest 2-card hand that you could possibly have. Okay. Now that's the falling wedge. Okay. So this is our falling wedge. Right. Oh, I switched cameras. What happened here? Stomach cam. I don't like that one. Let me go ahead and change this video. And, okay, that's odd. Okay, whoa. Never lost, okay. Am I back? Everything kind of like... The other game. Okay, so falling wedge is one, and then our other pattern is in the same family, and it's the rising wedge. And rising wedge is a similar pattern where price is moving in a pattern here, like this, and then it breaks, right? And it usually gets to the bottom of the pattern 70% of the time. Okay, so we have this type of. So if you just trade these two, there's about 10 basic patterns in the Pip and Run pattern evolution clock. But if you just traded these two, you're going to be infinitely better off than trading all the other crap that's out there. Okay, because they actually, when you even talk head and shoulders, all this other stuff, you're actually talking wedges. Okay, because these are going to form at the end of our 5-wave pattern. Okay, so we see the diagram. Let's put some meat on the bones and take a look at a chart. And let's put up a. Okay, it's going to put it up. We're going to trading view. Trading view. Okay, and we're going to go to. Let's let's take a look at the Dixie. This is the U.S. dollar index. Range of currency pairs by percentage change. And okay. And now to help me with those wedges, I like adding an indicator called MACD and MACD. MACD by itself is a lagging indicator, but we want to use it to forecast and to actually spot these wedges when they're running out of power, when there's exhaustion. And let me go ahead and remove all this stuff here. When they're so it's going to, we're going to find pattern exhaustion. We want to get in the market when the institutions are taking positions. We want to get out when the retail is, they're taking their positions, right? So actually, let me go ahead and find, let's cherry pick one. Oh, actually, let's go to the euro. Okay, EUR/USD, and we can look at Forex. Let's go Onanda. Okay. All right. Okay. So here is one right here. Right. There's a couple of them. There's a real dramatic one here. Okay. Let's look at this one here. Get rid of this line here and all this stuff here. Okay. There's a 4-hour one that was pretty neat. There's lots of like which one should we take? Oh, well, this one's really nice. Okay. You start seeing a lot of them in your brain starts going, oh wow, they're everywhere, right? But what we want to do is look for price when we have a low in price, an extreme low, and we want to use our MACD to find that part of the pattern. Okay, so the price pattern is what we're looking for, but we want confirmation with MACD. Moving average convergence divergence is going to that indicator is really going to target help us target the right pattern, the right falling wedge, because you're going to see lots of wedges, but it's ones where we see we have the bears are in full control. They've been driving this down, and we have a larger loop in MACD, a lower low in MACD, and then price rallies against the trend, and then price makes one last thrust, retail thrust. Why? Because the retail is, if it makes a new high, if it's making a high, we're going to short it. We're going to follow the trend. Okay, this is trend following, and a lot of retail are going to follow the trend. They're going to go to the higher time frame. They're going to say hey, there's a downtrend, and they're going to do all this stuff. And this is where people get messed up. In multiple time frame analysis. I believe in multiple time frame analysis. What's going to happen is, all right, see a question. ET. Oh, John saw one too. Let me go ahead and go back to. After I go to this, I'm going to check out EJ. EJ. Okay. So we got this new move here, and then people are going to go up to a higher time frame and go, well, the euro is going in a downtrend, lower swing highs and lower swing lows. They're going to use my 13-period moving average and say, well, Greg is below the 13-period moving average. They're going to get short. This thing is going to make a low. It's going to break the low here. It's going to lure a bunch of people in. Because why? Because it was an old level of support and it just got broken. So we got a level of support that's broken. We're below the moving average, and everyone's saying we should go short. Okay. However, the amount of force that is pushing it down is less than this one here. Okay. There's less momentum. The momentum swings, the momentum is indicated by the loop in MACD. The bigger the loop, the more momentum, and it means that we have institutional players on this move down. Okay. Now when they get out, they're out. They're taking their profits. then, the news, people start talking in chat rooms and looking at indicators and talking to their friends and watching, the news. They're saying, yeah, the euro is at its all-time low. It's going to go lower, blah, blah, blah. It's that hype. Then it's up in the magazine. And maybe, if it's the euro going higher, and, you might have supermodels and rap stars. Everybody's trying to short it or something like that, right? The moment your grandma says, hey, I want to short the euro, it's time to buy, because this is retail. This is extreme retail. And then what happens is, if you have so many people on the wrong side of the trade, sentiment is totally bearish on the euro, everything is pointing down, but this indicator is showing what we call divergence. MACD stands for moving average, convergence, divergence. The divergence is our crystal ball, enables us to see in the future what's going to happen next when everyone else is on the wrong side of the trade. You're going to find sentiment is going to be very very bearish, and if you start saying you want to buy the euro, everyone's going to laugh at you. That tells you that you're on the right side of the trade, right? And then all of a sudden, boom! Oh yeah, we're going to fade this, and they fade it. And then it turns into a wick. Right? So this is what they don't believe. First move up. Oh, okay, retrace against the trend. Hey, okay, let's short it. And they short it, right? And then all of a sudden, boom, they have their stops are right there, and they get stopped out. Okay. So this is it's big enough of 45.60 here to 0.0 whole number bankers resistance, which we're going to talk about that whole number, and we rallied up there. This guy is cleaned out. Stops are usually placed above the swing high because they're told always put your stop below a few pips above the swing high when you're going short. And then boom, they knew where the stops were. They blow them out, right? And then they take it down, right? So this is in fact, Ralph Nelson Elliott says there's a three-wave correction against the trend. There's your three waves: A, B, C. Okay. Now we're resuming the trend. Boom, down to a new low, right? Now on this loop right here, when we go down to a lower time frame, this is where multiple time frame analysis comes in. We'll see divergence on that lower time frame. Okay, we just gotta go back in time. Okay. And so here we go. We have a new high in price. Yay! It's really strong. Momentum is flat. It's the same. This is also divergence, where price makes a high, but MACD makes the same high. Right? And then it makes a new high in price. That marks our wedge. Why? Because we have this higher high in price. MACD is not telling us that there's any strength behind the move. Trend line break. We short on that, and then boom. Okay. And then we rinse, wash, and repeat. We'll see this pattern play out over and over again, where we have this wedging pattern. We'll see the wedge. We'll see a lower low in price. The MACD is not. And then we'll swing back up. Okay. This is another extreme right here. Big loop in MACD. That's our big loop. Is our big momentum move we call wave 3. Price moves in a 5-wave sequence. But all we're concerned with is the biggest loop in MACD. This is the largest or highest loop. That's what we call our wave 3. That marks the first part of our wedge. And then price starts to move up, breaks the trend line. MACD turns over, rolls over. We short it like Rover, and our target is the bottom near the last bunch of candles within the pattern, which our target was there like 1393. We got a little bit lower than that, and then they actually fulfilled the target and kept on going. We fulfilled the target and went down even lower. Okay, so let's go. John had one, and he says EJ 1 hour falling wedge. Okay, EURJPY, and that's current at current. I mean, look at that baby. Okay. 1 hour. Now, see how we have this big looping crest, MACD crossover, nice and bearish. But if we drop down to maybe a 15-minute chart, you can see we had divergence, and sometimes it stretches out a bit. Okay, we had a big loop, we pulled back, and then we had a kind of a runaway. Sometimes the yen pairs will run away like that, and we made a new high, right? Because if we were to draw a connection there, well, we didn't. We never broke it, so we wouldn't have okay, well, Greg, you said when we get this thing, well, we did get a break, right? Actually, we did get a break. We did break, but MACD just kept moving sideways, and it started moving up. Our stop is about here. We've been stopped out. The real stuff, you have a stop above the high, it stops you out, right? But then you extend this trend line across the lows, and then eventually you're making new highs in price. MACD is not making any new highs, right? The high is back here. This is where the institutional momentum is. This happened to carry a little higher on the back of retail, right? But when it finally broke, it dropped. Okay, it finally broke. Now, if you were to keep shorting this, you would have been, I mean, once you break the high of the pattern, pattern failure. I mean, you could have flipped around and got long at 27, maybe 15, and took it up to 47. I just don't like anything where MACD is diverging. I don't want to be involved in it. Okay, so it's a sign to not to. So even though it's well, Greg, you could have. It's like, no, I couldn't have, because it's against my methodology to buy when I see divergence. Okay, even though, I mean, and you could, because it could whip you out, and it could be market maker manipulation, kind of like drawing people in so they can drop it. Because it dropped the target. The old target is back here at the bottom of the pattern, and we came right there to the bottom of the pattern, 2660, right? So was that one it? No. So the bottom of the line of the wedge is only drawn on the fifth wave. Yeah, only on wave 5. Yeah. So we got your 3. So and in fact, let's go. We have a little bit of an Elliott lesson. I'm not. Let me go. Let's go back to our whiteboard, and let's go. Okay. So Ralph Nelson Elliott, back in the 1930s, he got sick. He was an accountant. He got sick, and then what he did was he stayed in bed and got a newspaper and went through a bunch of old stuff. And then he didn't have a calculator, he didn't have a tablet or iPad or any of that stuff. He was doing it by hand. But he looked at 75 years of Dow Jones Industrial data. 75 years. That's a lot to do by hand. So he went by so by hand. Okay, no pocket calculators or any of that. And what he found was a rhythmical pattern found in the markets, a cycle, a pattern that was repeating over and over and over again for this index. Okay, so this repeating pattern that they were seeing this repeating pattern that we're seeing, I have to mute your mic because it's giving a lot of static, is this 5-wave pattern that we call the Elliott wave. So we have waves 1, 2, 3, 4, 5, and then we have 3 corrective patterns against the trend A, B, C. Okay. So, and so he looked at this. So we have 2, 3. Now these waves have specific characteristics. Those characteristics we can use to our advantage to anticipate where price is going to go. And once we anticipate where price is going to go, we've got the edge on the market. Now, I wouldn't go about studying Elliott wave or going and get any books or anything like that, because it's extremely confusing. There may be 3 basic rules, but there are probably hundreds of guidelines, and they take their alphabet to the letter X, Y, and Z, and Roman numerals too. Okay, so don't go there. I think someone did, and they never came back. I think they went into a coma when they saw all the stuff. So, Greg, what you teach is nothing like it. I know, I should just call it Greg wave. Okay, I see. So stay away from any Elliott Wave International. You can lose money listening to them because what I use with this is called MACD. Now, if Elliott was dying on his sickbed, he says, "Don't use my system until MACD is invented." But we need computers, and we don't have them yet. Because International Business Machines are selling cold cutting, meat cutting machines, and when they start developing computers, that's when you can start using the system, right? Because if you get a room of Elliotticians together in a convention, they look at a chart, they're going to come out with 15 different counts, and it's going to drive you batty. And so, so when I was doing my counts and using MACD to confirm the count, they said, "Well, that's not Elliott wave." I go, "Well, I'm making money." So we're not getting paid to count waves. We're here to make money. So, and if it comes down to here, and there's Fibonacci relationship here, then I am buying here. I can sell here. I can buy on the break here. I can buy on a fullback there for a slingshot. I can sell here. And this is where my wedge comes in. My wedge is going to come in 3, 4, 5. Right? Now, I might not know 1 and 2. I may not know ABC. But I know that what I know about Elliott wave, and the things that you can take from Elliott, is his 3 rules. He says, well, wave 3 can never be the shortest. Okay, well, that's a clue there. It's like, okay, this is like charades. This can have to be the shortest, right? And wave 2 can't go lower than wave 1. That's another rule. Right? And then wave 4 can't go into the high of wave 1. Those are the basic rules of Elliott wave, the 3. So if this doesn't pull back into here, this doesn't go lower than here, and this is the longest one, guess what? You know where everything is in the market. You will know that, okay, well, if I get a big loop in MACD, that's wave 3, right? So if I have a 3 trend line break, what comes after 3, guys? 4? So 4 is always an orderly pullback of profit taking before the next leg higher. That's when you get your histogram. Your histogram lines will be below the 0 line. This is your 0 line. You'll get histogram above the 0 line, mountains. Then you'll get valleys for 4. Then you'll get mountains again, but they'll be shorter, right? Because it's wave 5. Wave 5 could either be a double top, failed wave 5. You can have 3, 4, 5, and that's your M. Remember I said if you know your alphabet up to the letter C, but you should know your M and you should know your W. Because this is 3, 4, 5. This is 3, 4, 5. Okay? So you have a flat wedge trend line break there, right? So you'll see this pattern over and over again. And the really great thing I mean, I've been teaching this part for a long, long, long time. You guys have, but you also, when you can find, Elliott says there's a three-wave correction against a trend, right? And what happens, what comes after C? Okay? What comes after C? Tell me in the chat box. What comes after C? This A or 1. Exactly. A or 1. I'm glad no one said D. A or 1. Now that's huge. If this is A or 1, let me just get rid of this. If that's A or 1, we're going to have a B or 2 and a new C of 3. That's going to be much higher than this old wave 5. So once you find C, you're looking at 5, 6, 7, 8x rate of return. A or 1, B or 2, C or 3, 4, 5. Why? Because this is the trend. Think about this. This is all one big long trend. If we are if the higher time frame is in an uptrend, that's why some people they'll buy a trend. They're in 3, 4, 5, and they're buying here. Then the ABC stops them out, right? Because they got in too early, and then this resumes the trend, right? We want to be looking ideally for C's in basically buying the dip. This is where you buy the dip at C. That's the ultimate. Why? Because it pulls back. It goes up and pulls back. You can trail your stop in this type of a scenario. You can peel off. You can add to positions. You can pyramid from point C. It's really hard to do it when you're here because the drawdown. You can get this drawdown going on right here, right? So you want to catch the trend at its earliest point. We want to find it at point C. Okay. But the other points that we can get involved in the trend that we call a slingshot trade. We have a 3, we have a 4. We buy the breakout above the trend line of a 3 and look for the old high. We can at least get back to the old high because we don't know if it's a double top or not. So we can buy the break. But right now we're just focusing on the falling wedge and rising wedge. This is our falling wedge at C, right? What Elliott calls an ending diagonal, right? So let's look for this. Derek, you must be on the highway. Rolling, rolling, rolling. Keep those druggies rolling, raw high, raw high. Okay, let's go to a 1-minute chart. And they're found on all time frames. Like here you can see where the end pairs, sometimes you get this divergence like Greg, look at this, man. Yeah, 3, 4, 5, ABC, 3, 4, 5, ABC. I mean, it's not even doing it, right? Finally, right? So let's do something a little bit, let's do GBP USD. I had some luck on that one. Okay. Okay, so here's a couple of things here. Okay. You can see we had our wedge. We had a flat MACD. We're making these powerful new lows. We think powerful, but they weren't very powerful, right? So we have this falling wedge, divergence on MACD. MACD telling us, don't do it, it's a trap, stop shorting. And then, boom, rallies to the north side, right? And then keeps going, A, B, C, right? And this is a 1-minute chart. So how much was that? So let's say we got let's say we got in here, we got sucked into the breakout, and we had to endure a pullback. So 31. Let's say we got in high at 31.77, got down to 31.68. So 9 pips. We didn't get stopped out. Our stop's below the low on this divergence event, and we placed a limit at the top of that. This is our 4. Let me just label this out because you may get a little confused. 3. Big loop MACD is our 3. And you want to tattoo that in your arm. Big loop MACD is our 3. That's our mantra. Big loop MACD is our 3. Big loop MACD is our 3. What's 1 and 2? We don't care. Okay? For you analytical people, I want 1 and 2. You don't need it, but you can go back and we can find it somewhere, right? And then this wave, this will be our 5 up here, and our 1 and 2 are really small, and sometimes they're more defined, but that's our 5. So that's our wave 5, and then we have our new wave count, right? So we have a 1, 2, 3. Now some of these waves subdivide. They'll subdivide and create, just like your finger has 3 lines in it. You don't have like those cartoon fingers with like one piece. There's 3. There's a joint there. So see this 1, 2, 3. 3 is a magic number. Yes, it is, right? So these things will subdivide into these 3-wave subdivisions. I don't count those. I just say, okay, I see in my head 1, 2, 3. Now put the 1 right there. Okay, so I don't go 1. A, B, C, Roman numeral 1, Roman numeral 2 can get really complicated. I'm not going to do that. And then we have a 1, 2, 3 down. So we have a 3 waves that makes wave 2. Okay. Now after a while doing this for a moment, you'll get into a habit or a flow and say, okay, I see it now. Okay. I see ghosts and dead people too. No, don't do that. Then you see 3 is your big loop. See that big loop, biggest, the highest loop, and like this is what you would see in real time. All right. Now price came back down and pulled back. Now look at this. Remember, Elliott says that wave 4 can't go into wave 1. So even though this 3 wasn't all that tall, I mean it's not the smallest one, but the pullback stopped right here. It stops. So that tells us this is a 4. And if we know that's a 4, then we know that 5 is on its way. And if we do that, then what we can do is take a trend line across this and say, look, you are behaving yourself. You have not dropped into the low of this. I'm going to put a trend line here and a stop below the low. I'm going to buy the breakout, right? I'm going to buy the break and maybe scalp. I mean, it's not that much to scalp. But let's see, if it goes any higher, and maybe we can get back up to here. Okay, maybe we form this Valentine's heart kind of thing where we might reach up there, and we really didn't. We only got to here, so that's like 91. Okay, but still, it made some pippage. We could establish a new trend line, and then when it broke, we could have gotten out. Right, so not much there, right? But what we do see here is like this. Oh, this is 5, and there's always wave 5 is divergence. Always wave 5 divergence. Either it's going to be a double top or it's going to be a higher move like that. That's it. I mean, there's your wedge. There's your rising wedge on 5. Your MACD confirms it. New high in price, but lower high in MACD. So you want to match these swings of MACD and the crest of price together, okay? And you can see, wow, this thing has made a new high, but man, MACD is not as tall as this one. So this tells me this is getting ready to roll over. It's getting ready to roll over and play dead. Why? Because there's no institutional money. When I talk about institutional flow, and I talked that in my video about institutional order flow, Institutions are here. They are not here. Why? The momentum shows you that they're not. This is retail. They can't hold it up by themselves. Grandma and her 1K lots can't hold this up very long. So what happens is, boom, it breaks. Boom, retest the line. We get short anywhere. We have 1, 2, 3, 4, 5, 6, 7 candles to get in here. 10 candles to get in here. 11 candles to get in. We can still get in. We break the low. We can still get in. So we got 13 candles to short this. MACD is going below the zero line. Angle of separation. And this thing just rockets down, right? And that's why I posted in my Twitter, I had a friend of mine, he's a great stock picker. I tell him, you're great in stocks, you need to stay away from Forex, because he was thinking about going long. And I said, dude, no, I wrote this, when I did this, Brexit will bust the pound, right? I hit my target, So, and these are guys are old daily FX people that I used to trade with, so no big deal. Yeah, he was. See, he's pointing up. He's got his British pound chart, and he's trying to use Elliott wave. I'm like going, dude, take my class. He won't take the class. So I'm like, this is not. This is going lower. And I told him, I said, so the pound is likely to hit long. I said. Well, and I think I tweeted him back. I said we need to. This thing was going to go lower. Yeah, I said I agree with you, brother. My Sunday video showed a breakout. Remember, I said that I was bullish the pound. But I said my first 31.97 first banker support target hit its forecasted pip and ran long and short. And so I told him that it was going to go lower. But I'm shorting down to banker support. Now 132.00 and then 131.50. So that was my response to him. Yeah. Yes. Michael says confirmation of trade is closed candle above the wedge. Yes, it is. I want to see a closed bullish candle, not a wick. Okay. If you just get a wick above that, it could be a trap, right? So not just the break. Absolutely right. We want confirmation. Now, let's say you get a really big bullish candle shooting up through there and you can't catch it, then drop to a lower time frame, go even down to the minute chart, and look for pullbacks where you can get involved in it. Okay, just because it ran over. That's how cold it is. My friend, we're all at Daily FX. Rich Crevo, Sean Hyman. He decided to move to Minnesota because the sun's up there. But they got to paint flowers on snow. It's so cold, right? It's minus 16 with a wind chill of minus 28. Like, and really? Why'd you leave Dallas, man? Anyway, great guy. So our closed candle, and we can now we're looking at this, and like here's my count. Okay, here's big look. Say, well, Greg, look, big loop back, D wave 3, right? Yeah, there's your 3, right? 4, 5, right? But MACD has made a new low. When MACD makes a lower low, this is not divergence. A lower low means this becomes new wave 3 again. So basically the count gets reset. So this is 3 right now. Okay, if we just see that, and we see this is 4, then that's pretty clear. Retracing and orderly, some profit taking, right? And then and then this is our slingshot trade. We see a trade like that. That's like free money, especially if it's stalling out in a downtrend. What we'll do is our slingshot trade is like we draw a trend line across the bottom there, and we look for price to return to the low, to retest the low. Now, you got to be careful with those because lately, because of the low volatility, we've seen these 4s like go all the way up. They just don't come back down, right? So we've got this we call a slingshot, where we know this is 3, and I mean, there's 3 ways we can trade this. I mean, we could have the one I posted, which I'll share with Mike, what I posted last week, which is brand new. I mean, this is like brand new, brand old, because it's something I used to do about 10 years ago, but now it's working really good now, where you take your wave 3 and just get long on a break with a stop below the low, and then you take it up to the 38% retracement and just scalp it. I know I'm kind of like pouring a lot of stuff here. You start seeing the connections of the market, and you start saying, oh, what about this? And maybe I should just ignore it, and so not to confuse you guys, but it's just such a treat. It's like you see this, like, oh, please, I want to buy this on a break, and then, boom, it hits that 38% retracement, and then you go, oh, I'm out. And then I can flip around and get short again and aim for that low, and boom, hit that low, right? However, MACD divergence doesn't show up. In fact, the wave 3, what we call it now, this is the biggest loop in MACD. It's lower than this one. So guess what? This becomes 3 again. Okay? Or not again, but this becomes 3. Because this loop is lower than this one. That becomes 3. I remember. This becomes 4. And what we have is a 3, 4, 5 sequence where we'll go 3, 4, 5, new low in MACD, 3, 4, 5, 3, 4, 5, 3, 4, 5, 3, 4, 5. The moment this thing stops and starts heading back up, right? See, now this is our divergence event here, right? Lower low in price indicator is flat, but it's higher than the previous low. So that's, look, we're seeing a wedge break right now, right? But it's like one of those, like I told you, one of those big, long candles. Why? Because people have been shorting this thing for a while, right? And see, and it came right to the top of the pattern. It hit 75. If it can break 75, then we might go to 32.00. This might be the low of the day, right? It might be it. So if we were to buy it, okay. Okay. This is a paper trading account, and let's put a stop. Let's put a stop loss on this. Oh, this is okay. Yeah. So I would say, I would just hit the X and close this out if it got below 31.70. Right. So if we got below that, then we would go ahead and kill it. But let's see. But this is your real time. It's on a 1-minute chart, and we'll see how. We'll wait a couple minutes and see if it continues to rise up. MACD opening up, histogram above the 0 line, and we're at 74. Bankers resistance line 13175. And I see questions. Yeah. So we had several candles, but this was our big one there, right? That would be our confirmation. Okay. Pulling back a bit. And let's see, we can take the peak up here as to be the beginning of our let's call it Fibonacci, right? And see if we get maybe, I don't know, this is a 1-minute chart, so you're probably not gonna get 100 pips out of this, but we might get 5 or 6 pips out of it. Okay, pulling back. $72. Yeah. And see any. All right. So first target, Baker's resistance. Yeah. The first target was 75 is where, we reached there already. And I think, so I would probably shoot to the top of the wedge. We kind of hit that already on this first shot. I mean, the first candle. I mean, ideally, what should have happened, Mike, was see that we had a couple of candles there. 1, 2. We had 3 candles to get into this trade. So we're actually really kind of late to this trade, right? That's why I got in on a pullback there where that little dot is, right? I actually got in at 75 because of the spread, right? But if we got in at 71, 71.8, any of those, they're outside of the pattern, we would have been up. But there we go. So we're breaking higher. So we're above the pattern, but we've got to cover the spread. We're on a 1-minute chart, so covering the spread might be a little bit interesting. But let's see, the my 618 is up here. It's 31.80. So let's see if we can get there. Means hitting. See that area? That whole top of that pattern is acting as resistance. $74. It's kind of late in the day, so it'll be interesting to see that sometimes late in the day you get these late day, I call the Happy Meal reversal. I used to call it lunchtime. Happy Meal, well, they kind of like didn't want me to use Happy Meal reversal. Because what happens when traders go to lunch, and what happens is if the trend has been down for a long period of time, they close their trades out and they go to lunch, right? And when they close out their trades, it reverses the trend. So a lot of times you'll find lunchtime, 7 a.m. Eastern time, you'll find the UK traders go to lunch at 7 Eastern time, then come back for the New York Open. And then Tokyo, actually the whole market shuts down in the middle of lunch, and then it starts back up again. So sometimes you'll see these reversal patterns happen at lunch. Now, right now it's after lunch U.S., and I know it's late in the UK. The markets are probably most likely closed. London 6:55, they are definitely closed, and your European markets are closed. So really the only banking center that you have open is the U.S. And if they took an hour lunch or 2-hour lunch, then they should be coming back. So 74. Do you suggest fib levels with previous price action as confluence or targets? Yes. But I'm really focusing on the swing as it pertains to the last wedging pattern. Okay. So this is when we're on this 1-minute chart. I mean, basically, the low of the day was put in at 11, right? The low of the day was put in at 11, and actually we had a little bit of divergence here where this was our another 3, 4, 5. So it's a 5 of a 5 within a nested formation, and so now we have an A, B, C of a higher. So let's see. Okay, so we're pulling back. If this is a wave 2, then we're good as long as we can stay above the beginning. All right. The moment it crosses, though, that's when we have a problem. But what I'll do with these swings is I'm gonna clear all this, remove all drawing tools. Okay. And so what I'll do is I will take fibs from one swing, like from here, from this swing low, the low of the day, I'll take it up to here, right? From swing to swing, right? So that's going to give me some fibs, right? So I've got my support ones. I'm going to have my resistance ones too. So I'm going to take I'm going to go from here, from the top of this one, down to this low. So that'll be my resistance, right? And it's not really easy to change all the colors. I would make all these red, make all these green, so I know the support and resistance ones there. And then I'll do projections too, where I'll say, okay, if this takes off, like it may or may not, then I would take a fib projection, taking this swing low, that swing high, and if this one puts in a bottom and this starts to bounce higher, right? So now I can have, okay, my 100% expansion, 3176, it's not going to help me a whole lot. The 1.618 and the 38% retracement, kind of like there's coalescing there. And there's also the 30 projection. Where's the projection? Yeah. 2.618 and the 618. They kind of almost, there's a little area of confluence there, right? And the 4.236 is at 131.90, which is that's the banker number that actually shows up on the fib projection, right? And this kind of looks like a Gartley bat or something like that. But I think, see, we came for a pullback, shake and bake, gosh. So there's your 1, 2, 3, right? Expansion target, 75. We hit 75 again. That was 100% expansion. But this bullish engulfing candle took out all of that bearish push down. So, and we were up $3. So could have closed out and taken our $3, right? A lot of work for $3. But I think, 75 line, we challenge that, we break, we can roll into 0-0. That's the story. I'm gonna stick with it. And we're just kind of hanging in there. Now, we go to simulation, then we can actually, I can show you some more stuff. We can come back to this, but you go away and then they'll go, hey, how about now? Like, no, okay. Let's see. Okay. Okay. I'm gonna move this up. Oh, there it is. Okay, here's our 75.8, 135, 758, 759, 76. And see MACD is approaching that 0 line. Maybe struggling. Well, we can just take it and say, hey, there we go. We're out. $4. A lot of work for $4, right? So 1 minute chart. It got to the top of the pattern, and we're out. Okay. So let's go to simulation, and we can actually move things along a little bit faster. And guys, give me what currency pair would you like to see us trade and the time frame? We're going to move to the simulation part of our show. $1.15, that's what I have, right? Okay. So we're going to get started, and the way we do this, we want to have a higher time frame chart, and I'll go ahead and start it. And I'm going to, we're going to move this down. This is how we adjust the speed. This is the current template, but we're going to change that template. I have to make this a default template. Maybe I can try that. Vanilla, pip and run. Pip and run vanilla. So that's my trigger chart where I'm going to place my trades on. But I want a higher time frame chart. And when the expert properties, we can set it up. I set up an hour chart. So I'm going to go to File, go to Open Offline. I'm going to find an offline chart. I'm going to choose this SIM 1 hour. The exclamation point SIM, comma 1 hour has 1,683 bars of data. And I click that and click Open. All right, now I've got a higher time frame chart that I can use for multiple time frame analysis. So I'm going to put this over here off to the side. I'm also going to put my template on, my pip and run template. I want to be able to look at this chart. Now, sometimes the MACD might be wonky on it. Okay, so that's my 1 hour, and this is my 15-minute chart. So now I have my multiple time frame analysis, my screen set up, right? And, oh, I see some MACD decide to come up. Fantastic. Okay. So I'm just going to click. Okay, 5 minutes. Okay, already. Yeah, if I stop it, then I have to like reset everything from scratch. Okay. Okay, so we'll just start that. Okay, so we're gonna press this arrow for play, and just for I put the 75 pip stop loss and 25 pip take profit. We can adjust it. We just want to put a stop loss and take profit in pips in the system, so we can adjust it. We can drag them later. But let's go ahead and speed this up a bit. Now, what I'm looking at is I've got higher high. MACD is making new highs. This thing is skyrocketing, right? This thing is not. And in fact, it is rolling over, right? So what I can do here is to start with a, put on my, there is no divergence, but I do have an established low and I have an established high, and we're pulling back. And I'm looking for, this is my big loop. So this is my 3, and this is our 4. So I'm looking for a pullback to either a 50% or 618, if I can get it. I'm going to look at my stochastics. I'm going to look back down here. When it crosses down around 20 and turns up, I'm probably going to take a trade as well. So let's see if we get our drop down to the 38% retracement. This is extremely bullish. My goodness, lots of green candles above the 200 simple moving average. MACD screaming above the 0 line, right? But this is where we can maybe find we're a whole number around there, 13004. Maybe I'll get long there. I don't like buying at the 23% retracement, but this looks pretty bullish. And I was right. Maybe it's going a little bit lower. 29.97. And now I can move my cursor here. I can move my stop up. I can move it there. I can move my stop up a little bit. And I can move that take profit up a little bit too. Okay. And sometimes, see, running too many things. Okay. See, now this is the big loop MACD. Histogram below the 0 line is wave 4. So we're in 4 right now. We're kind of 4ing out. We can actually draw a trend line across the top there. And look at stochastics crossing up. And I'm going to speed this up a little bit because this is getting kind of slow here. And maybe a speed of 4, maybe a speed of 5. Trend line break. And I might have got There's our whole number round number again, 13003. We have maybe a breakout, perhaps. Again, that 23% retracement sometimes can be kind of suspicious. Sometimes we get like a drop after that 23% retracement. Ideally, I like playing off the 38 or the 50. Okay, we're kind of struggling with that. And we can speed this up a bit. It won't, maybe at 9, maybe. And then what I can do, you double click, and you get and then that way you can either close out the order quickly if you're in a profit or not. Okay, so now we're getting some lift off, right? And I can close it out and take it, right? So this is what we call our slingshot trade. Big loop MACD is wave 3. What comes after 3, guys? See, big loop is 3. 3 magic number, right? Exactly, right? And then 4, right? So we had profit taking. Big move up. These guys took profit. And now the trend guys go, hey, buy the dip. It's pulling back. It's in an uptrend. So they buy it. We bought it too. We also had stochastics. Yeah. Get out of my way. So cute, right? No. Anyway, draw a pen, right? So this, we had our stochastics cross down below the 20 and come back up. Stochastics 1433 is our settings, right? Now you say, well, how about back here, Greg? So I want to look for something where I have this kind of working together. This is our profit-taking decline, our trend line break. All that works together. Trend line break, MACD, stochastics crossing up. Our old high is our target. That's our first target. That's easy. It's either going to be, this is 5, right? Oh, look, higher high in price, lower high in the indicator. Gee, I wonder what that's called. Now, Greg McLeod said this, the death of MACD divergence is the death of trend. The birth and death of trend is MACD divergence. Okay. So this may be ending. Now this is not moving. 31 to 11. I don't think this one is in line with this one. Yeah. Well, maybe it's an old one. Maybe I got the wrong one. Maybe I got the one from last time. No, that's the same one. Okay. Well, that's kind of like weird. Offline. Open. And template. Then run vanilla. And go to the edge. Oh, there we go. Wow. Yeah, that's it. So look at this. 1 hour chart, double top. Oh, look, 15-minute double top. Right? So I'm going to clear out all this stuff here. Erase all drawings. Or would you buy the break? Yeah. I can buy the break of this trend line. Right? Can I move this? Okay. Delete. Okay. So, you're going to have the trend line there, so I probably wouldn't, you could have, and I did. I did buy the trend, right? Yeah, hindsight's 20/20, but I did buy the break of I built the break of the trend line, right? I had to sit in it for a bit. Now, ideally, I usually, guys know that when I see a 23% retracement, I usually say this probably going to be a fake out and drop a little bit lower. What got me into this trade was we're at the 1300 banker number. The whole number, round number was right there. So we got whole number, round number. What happened here? Okay. Whole number, round number. Maybe something here. Or something slow. Oh, yeah, we went a little bit. Yeah, I'm glad we got out of that. That was the top. Yeah. But look, we made a new low in price and a higher low in the indicator, higher low in the indicator, lower low in price. But it dived. It took a dive after that. All right. So GBP stopped it. Yeah. Right. Yeah, it's still rolling south. Right. So this is what we got going on right now. Okay. So we took our shot, made $286, and we've got divergence forming. It became an early shot because MACD is opened up. We do have the price pushing through. We want to see a closed candle outside of that trend line. So this is our 3, 4, and 5. We're looking for A. And so we would be buyers or sellers here, guys. Yeah, we would. I should sell on the trend line break. Okay, sounds good. I'm going to slow it down a little bit so we can catch that trend line break. I think there's a way of actually adding a like a sell stop there, but we're just going to like eke it kind of slow and then hit sell when it breaks. And that looks like a break to me, and we'll take it. It broke, turned green after I hit it, right? And I take profit would be the bottom. That wave 4 bottom is my take profit. Okay. So price rally back up against the trend line. And we can speed up a little bit too. So we want to sit through all this. And okay. So price is moving down, and and take it. Oh, and we went any lower, right? Pause. Okay. All right. Take 2, let 1 run, John. That's what you. Good call, man. Stop above previous high or higher. Yeah, I would put a stop maybe 4 or 5 pips above the high. I think we were at 75 or so. But then we hit our target. There's our, and you can see whether it was an M pattern or a rising wedge, it's almost an M, right? M and our target, and then we went a little bit lower than target, right? Now, it's interesting here because we have we're an oversold position here on the 1-hour chart. Hey, MACD is working somewhat. I think Michael's brought us good luck because usually it hides out somewhere. It's very temperamental, some of these charts. You almost like they have perception. Hey! Don't mess with the missionary, man. Okay. All right. Now, this is one of the trades that where we got this big loop MACD down, and stochastics kind of rolling around, and you saying that maybe we can get a pop higher counter trend, like a counter trend scalp north. But we want to see what's going on. Let's, we can slow it down a little bit. I'm slowing it down in case I would like to scalp it to the north side. And, it kept going south. 38% retracement. And we could probably have a steeper trend line here. Kind of like across that. Well, it's maybe we get a bounce off that 38, 67, 63. Kind of lit. 55. Okay. 58, 59. 60. If we took that at 60. And then bring that stop, what's that going to up? That stop is way down there. Okay. And what if we did like John's strategy, say, let's put 2 on, right? And then let 1 run. And maybe speed this up a little bit. We broke the trend line. MACD is turning up. Oh, something happened. Whoa, gap up. Whoa, 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 whoa. What happened here? Close it out. You guys see that? We had a gap up. It must have been like the weekend or something. We caught a gap. Everybody's working for the weekend. Everybody's working for romance. You got the key to my heart. Hey, look at that. Hey, that's pretty good, huh? I guess. What do you guys think? Make sense? Kind of, sort of? Very cool. Very cool. Yeah. So you take a chance there. MACD cross, trend line break. Your stop is it's a very low risk trade. But I'm looking back here. We're kind of oversold here on the hour. And this crosses. And remember, Elliott says he says we have a 3-wave correction against the trend. 1, 2, 3. Remember I showed you in the diagram. Where's my diagram? Where's my wonky diagram? Oh no, I didn't delete it. Okay. Remember I told you, wave C? You can find if you can find the end of the correction, ABC, right? Remember I told you? If you find the end of that, then that's going to blow up. So we have our 5, A, B, C. D is 1, 2, 3. Then boom, A leg up, A or 1, B or 2. See you later. I've never seen that emoji. See, if the 5-wave was into a strong level, would you still buy them? the 5-way was into turn your mic. Ask me. Let me hear that.
Yeah, hey John, if the top of the 5-wave came into strong resistance, like a banker's level or just major resistance, would you still buy the break of that trend line back up?
It depends on what. You see how this 1 hour here? This is what we call our compass chart, and it is above the 200 simple moving average. So that's telling me that it's a strong trend. So see, so it's hitting these levels, and then it's pulling. So it hit the whole number 300, and it pulled back, and so it's here. But if we look back when it was below, then no, I wouldn't.
Yeah.
No, because now Elliott says we have a 3-wave correction against the trend if the higher trend is moving up, right? If the trend is going down, it's going to be a 5-wave. It's going to be 3 waves in the opposite direction, A, B, C, and then we want to sell into that, right?
Yeah,
because the ABCs are counter trend.
Yep, cool. Thank you.
You're welcome. Thanks for the question. Right. And okay. But Mike, before you go away, tell me. How's it so far?
Awesome, mate. Very, very clear. Thank you.
Okay. Good.
Very good.
Okay. All right. Good. All right, guys. So we've got this blowout here, and look at the MACD. It's coming up out of the water like an orca, like an alligator, a crocodile. It has his mouth open. The blue line is like the top of the mouth. Arr, arr, you know, it's kind of it's like Jaws when he grabs the boat and he like tears it up. He grabs the guy's leg. Ah! Think of MACD like a giant, like a whale or something, you know, or a shark. It's coming up out of the water. The 0 line is the water line. That's our water line. So we say above the water line or below the water line. It's diving. Sometimes it comes up out of the water, grabs the fish, and jumps back down in the water, right? But it's open up angle and separation with the top of the mouth, the blue line, and the bottom of the mouth, the red line, pointing up at an angle, like a 20-degree angle. This thing has a lot more power that could possibly go higher, right? If this is 1, 2, and 3, and 3 is really it was a lot of pips, but it really wasn't a really big move. So there's probably more gas in the tank. So this is where, and we're at the round number again. So if we were to maybe look back here and say, okay, wow, this thing gapped up. Sometimes prices come back to fill the gap. So if this is A, then 2 would probably show up here, right? Where if this is our, you know, like I said, if this is our A or 1, right? I think it's definitely 1 because we're above the 200 moving average on the higher time frame, right? So we might come back to fill this gap, and then when the gap is filled, we see a launch higher, right? So it's doing 1, 2, 3 on a smaller time frame, and then it's actually an A or 1, 2, 3 in a larger time frame too. So all this is happening in micro world. So let's go ahead and press play. Oh, get rid of the pen, erase all drawing tools. I might just leave my little triangle there. Normal drawing mode, okay. And then, hey, profits are up, and the results, okay. Settings, okay. So we want to, let's press play and see if we get that pullback to fill the gap. And maybe move a little bit more. See if we fill the gap. And then we could probably draw a trend line. Draw pause. Oh, okay, we're launching already. Okay. So, I don't think we filled it on the hour, but yeah. So we got this launch out here, and here we would say, okay, if this keeps going, our stop would be at like 79. If we got long. Oh, okay. Oh. Oh, and we limit out. Okay, pause. Okay. So we never got down here on the 1 hour. And this could be this bad tick data too. It could be like maybe MT4 just didn't have that data and just decided to like lock there. But so it was kind of interesting that we saw the gap on both. But for this to be a gap, 75 to was huge. This is a 15-minute chart. Okay. So there we go. We broke the trend line, and we came back and we tested the old high again. Same kind of thing here. We can wait for stochastics to come back down to 20 to get long again. Or we can say break above the high, get long. Oh. Okay. Because we already took a profit on that one already. And we're at 18, so this was probably 25. Maybe? What is that? Close at 34. Okay, it's at 34. So we're at 18. So we'll see if let's see if we get a pullback back here where we want to see our stochastics come back down and then come back like that. That's what we would like to see. And just because we want to see it doesn't mean we have to see it. The market does what it wants to do. We have reasonable expectations, but the market can say, no, I don't want to do that today. Sorry. And that's why we have a stop loss. Okay. So let's see. We're going to speed this up a little bit and see if we, well, it made a new high. And MACD made a new high too. So that kind of tells me that this may even climb even higher. We crossed 45.50. It's not divergence, but our stochastics is not coming down. Yeah, I would wait for stochastics to come down. I go, look, okay, that's fine. I missed it. Okay, no worries. Okay, stochastics coming down. Oh, I came down and crossed, right? So you want to follow it down. It's just, I mean, I don't have a pattern to get it other than hold my nose and buying it. I don't have a falling wedge. I don't have divergence. And this is kind of stuff where you get in long and it drops and then you lose all your money and you mail this money back here, I mean, there's from the Elliott wave standpoint, I don't see anything. I mean, I might have gone long. There it is. There's where I want it, right? Okay, now. Oh, I'm too late on the draw. Oh my God, it's on the divergence, guys. Did you see the divergence event? Oh, that was my ABC. Oh, wow. Okay, so that's all the ABC I'm going to get. Okay. Yeah, that was, there was divergence back here. I think it was going to get stopped out. There was divergence here, and I pressed the sell button, and it got filled down here at the bottom of the target, right? Now, yeah, so this was stopped out, right? So this is. And see, my 1 hour is just not even doing anything. My 1 hour is just, hey, I made money on that. So that's my A leg down. Let's see if we get our C, A, B. double top, and the triple tops are not usually very, okay, there's our divergence there. We're making new highs on that. Okay, so this is where MACD makes a new high. Okay, didn't hit the stop yet. Again, but you see, look, it was a stair step, really sloppy stuff. There was no edge in this market, and that's where you just want to stay out of that. Now there's kind of divergence event there, but again, lots of loops, and we just see what happens at the end. They might just stop out or something or whatever. Oh, I don't know what happened. That was quick. Oh, it limited out. Okay. Nice. It actually did. Okay. Went a little higher and then dropped down and kept going. Okay. But did it? Yeah. Well, one we got stopped out on. And the other two we made money on. Okay. Yeah. Okay. Any questions? Any questions or any charts you want to take a look at? We do have the Aussie rate decision coming up today. We used to have Hemi and Garth tell us about dollar cat. Dollar cat 50-minute chart. Okay. And do you want simulation or you want to look at a live chart, Mike? All right. Okay. Somebody's chiming in. Okay. Dollar cat 15-minute, and I'm looking for. Let's get to the live charts. The live charts, please. Brought to you by. Oh, I want to clear this out. Okay. Okay, USD CAD, and then go 15-minute chart. 15, and lots of divergence there. Yeah, that big loop back D, and then we're making new highs, and we're just crawling up here on the 15-minute chart. I mean, and we are rising wedge. Yep, a good identification of this pattern. Let me go ahead. I'm going to remove all my chart. Remove all drawing tools. There we go. Got a nice naked chart there. Oh no, cover your eyes. It's naked. All right. That's our. Oh, come on. Let go. Let go my ego. Okay. So, and that's our. As I said, 1 and 2 are so small. And, you know, we had divergence event, big loop, 3, 3, 4, 5, right? And a little bit lower, right? So you wouldn't call this 1, 2 because why? This 2 is lower than this, so this can't be 1, 2. I mean, I would like to call it kind of 1, 2. So our 1, 2 is like it gets really grainy and like granular. It's like, okay, here's our one right there. And the little pullback here, if that wick is 2. And maybe on a smaller time frame, you could have like traded that or something like that. 1, 2, big push up for 3, right? There he goes, 1, 2, 3, and then just really extends 3, 4, 5, but makes a big giant loop there, so that's their 3. So where MACD crosses and ends, that's where we mark our 3. You see, this gives us the objectiveness that Elliott couldn't give us by itself, because remember, he started doing this in 1933, and Gerald Appel, who created MACD, wasn't born yet, or who was very little and didn't know what MACD was. He was sucking on his thumb. But he said, one day you will make an indicator that will make my system work much better. And he goes, to that, Gerald just went, "Mama, strange man talking to me." Okay. So we have our 3, 4, and then we have what our 5 now. You probably said this could have been in a trend line break, and then we busted higher, right? But our MACD made a little bit higher loop. That it gets kind of, when it gets, you're going to find lots of exceptions to the rule. The key is that you're going to find stuff that's going to follow the rule. So you might have to be a little flexible. That's where Elliott's not flexible at all. He says, well, no, this has to be a Roman number because it did this and that, and this is an X, Y, Z, ABC. Now, if I were doing this 5, okay, there is something called an irregular B. Okay, you guys have heard me talk about the mysterious irregular B, where you have A and B can actually be higher than 5. And he actually wrote a little parchment note, in one of his books, in which he talked about the irregular B. And I mean, go to my Chiazza. Just so you guys, I'm not making stuff up. You're just making stuff up, Greg. The curve fit the system. Like, no. There is something called the irregular B. Irregular. Right. Okay. So that's our zigzag that we normally trade. This dot represents wave 5, A, B, C. This is called a zigzag and uptrend, right? And we buy at point C and it blasts off like we saw in the simulation, right? A, B, C. Now, rare are the A, B, C, where A and C are the same. Run away from those. This is going to blow up very fast. Because what will happen is you're waiting for this thing to zigzag and drop down to the low of, maybe lower to maybe wave 4 low, and it doesn't get there. Okay? So you'll get smoked. You'll say, oh, wow, here it comes, coming down. Oh, it's not going. Oh, it's still down there. Man, it's sure taking a long time. Oh, I'm going to go to sleep. And then you wake up, bam, 1, 2, 3, 4, 5 to the upside. So when you see double bottoms after wave 5s, this is where you flip and go the opposite direction, right? Just hold your nose and just buy it, because that's point C. Now, the other very rare thing is when we have an A down after wave 5, and then it goes higher and makes a new high. However, it doesn't make a new high in MACD. MACD is telling you, no, this is not a 3, don't worry about it. But I got stopped out. I had my stop above the wave 5 high. I definitely got stopped out, right? But you don't go around and buy it either, because sometimes you'll see, if you see a new higher loop in MACD, yeah, buy that sucker, it's going to go higher. If you see a new high and still divergence, this is what this is, a wave B. And usually those wave Bs, when they're irregular like that, and they're diverging, they are going to drop very hard, very fast, right? Because what happens is market maker manipulation. This is where basically you got a lot of people short, and they just keep pushing it up and just hitting all these stops. Once it's a stop run. Once they run all this, because everybody's putting their stop above wave 5, right? So it's a stop run. They run your stops, And after they, oh, I lost money, oh, I stopped me, oh, yeah, I thought it was divergence, like Greg said, he lied to me. And then it turns out, oh my goodness, it dropped 300 pips. And I see, it's the regular B. You know, that thing's a B. It's like, yeah, it is, huh? Okay, so let me go back to our, right. So if we were to, yeah. All right. So we just put one in there, right? And then our target would be the old wave 4, right? Or even A. You can take off some at A and take off, if you trade 3 individual positions, or if you can take off 2/3 at this point and take another third off here. I mean, it's kind of loony. But see, this is the inverse of dollar CAD is the is negatively correlated to oh, where was this $1 million? Okay, we're going to change this. Pound CAD. I mean pound dollar USD. There's like a, I think 80 or 90% correlation. Really? All right. No, it's not this. This is not the same. No. Okay. Oh no. Okay. So I think I gotta go somewhere here. No, I think here. Okay. And sync symbol. No. Okay. All right. Make this USD CAD and like that, and I want. All right. So these are pretty much inverse. What's going on? Okay. What's going on? What's going on? What's going on? Right. 15 minute, 15 minute. So basically, we've got a bearish rising wedge there, and we have a bullish wedge. Why did you draw a circle there? Okay. Right. So they should be going the opposite direction. Okay. So if we were going over here and paper trading, we would go to click buy, right? So they should move pretty much in the opposite direction. Okay, I see chat in the chat box. Okay. No. Yeah. I'll show you. Malta, see Malta have. Malta? Well, ma. Yeah. Currency correlation. All right. Okay. See, they're 78% correlated. See, pound cat, I don't think it's that correlated. Let me get rid of. Let me exclude. Yeah. Let's let pound cat. I don't think it is as correlated. Yeah. So here is our dollar CAD. Oh, where's pound CAD? I thought I added that. Yeah, refresh. Oh, refresh. Okay. Pound CAD. So pound CAD and dollar CAD. Well, they're 81% correlated, but they're all, I mean, pound CAD's 81% correlated, but I don't trade pound CAD. But I do trade pound dollar. I mean, I trade pound CAD sometimes. But there is a, not the 5-minute. Yeah. See, it's 78% correlated, right? 92% correlated. So when I'm trading pound dollar, I'll look to the dollar CAD and say, okay, well, I'm pretty correlated there. Pound dollar and dollar CAD on a 4-hour chart, not so much, right? And pound dollar and the dollar CAD, 67% correlated, right? But it's fair to say that if I'm looking at this, that usually I see some type of a correlation going on where they will. I want to see. Okay, just showing me these two. I want to see. Yeah. Yeah. Mm-hmm. Yeah. So depending on what I'm trading, like sometimes what I'll do is I'll look at. I used to look at dollar Swiss and euro, but ever since the unpegging, it's not as correlated. In fact, you know, I have my correlation table. So let me get you the correlation. See. Yeah. Let me give you this in the chat box. You guys, some of you guys have this. Some of you may not have this. And then it kind of tells you like there's a euro dollar pit and there's a pound dollar pit and Aussie dollar pit, but there is really no pound yen pit. It's really pound dollar plus dollar yen equals pound yen. Okay, that's how they derive. That's how they derive the currencies. How they mix them up. Think of them like the primary colors. You know, if you want, purple, then you mix like red and blue, mix purple, or green and let's say yellow and blue make green. That's kind of like you've got the 7 major currency pairs, and then you basically mix them to create all these derivatives. Aussie dollar and Kiwi dollar. If Aussie dollar is down and Kiwi dollar is up, then Aussie Kiwi is down. It's kind of obvious, but it's kind of cool to see it kind of laid out like this. I don't know if you find that helpful or not. Cool. Okay. And let's take a look at the Australian dollar really quickly. But let's go back. I want to go back to this one. Isn't it dropping? It's like everything's frozen chosen. But yeah, I mean, this is falling like a rock. I like this more short than this long. I mean, eventually, why UK, Canada banks are still open. Canada's in North America. They are still kind of active. UK, Derek is on his way home. But where is Derek? I think did he have trouble logging in, maybe? I think he was, because he kept coming in and out of the room. I should have asked him. Maybe he texted me. That message. Okay. No. Okay. Nope. Okay. So we are 33.16 on that, and if we go out to a 4-hour chart on that, look at our dealer charts, just get like a 50,000-foot view, and you can see that I'm going to remove all indicators here, all drawing tools, sorry, and go here and make this one chart. One chart is enough for all of us. The DCE. Okay. Really? Okay. So here's our daily chart. Well, it's interesting, you know, that we may have a little bit of a pullback. And I was thinking that we would get one anyway because we're up against all this resistance here. But this is like a bottoming pattern where Elliott tells us, hey, three-wave correction is a trend. 1, 2, 3, or A, B, C. 1, 2, you know, this is probably going to, after that little pullback that we get, maybe on that 15-minute chart, this may blow up to the upside. And I think non-farm payroll might be the key to that. Broken head and shoulders mean bullish. Oh, I see an inverted head and shoulders. Oh, right, like here. Like that. And the pattern will be invalidated if we broke below the right shoulder, right? But I'm really looking at this as, okay, big move back D, this is our 3 or 4 or 5. If this was like a 5-wave correction down, it's actually 3 waves. And then we have a new low in price, naturally a lower low in price too. But this also, the bullish scenario may not kick in right now. Again, we have non-farm payroll coming up on Friday, and that could send the dollar higher. But if this is our slingshot pattern, our 1, 2, our 3 could go to the 33.99 area, or 1.618, 35.78. Maybe even, because this is a really sharp drop. I mean, basically it's like a gap and a drop. And usually when we have lots of red candles like that, we usually fill them in on the other side. We have what we call price symmetry, where if you ever remember Valentine's Day when you were a little kid and you drew a little paper heart, and then you drew it on one side like this, and then you opened it up, and you have the 2 parts, right? So this is like this. We have whatever happened on this side of the equation, we will look to see a similar move in price to the upside, usually, right? So this current bearish move may only be just a small wave correction in a larger scheme. I mean, because you see how it like fall, the way it fell. I mean, this thing kept trucking higher. I mean, it's like almost like somebody's got something going on. Like, yeah, we're gonna keep pushing this higher in spite of divergence. So I would suspect that if we do get a pullback or a drop, it will be an opportunity to get long again. In fact, we can add see what stochastics. Sometimes stochastics will give us a clue. And yeah, we're in the over sold area right now. So it'll be very interesting. We might even just come down here to 32.96, and it might form that double bottom, that divergence double bottom that we're talking about, where it doesn't go very far. I could scalp this short. I wouldn't count on to go very far down. On the 4th wave, 15-minute 4th wave. You got 15-minute, 4th wave. Yeah. Could I let's see me drawing tools again. Okay. Yeah, because after we make new highs, I mean, yeah, we redraw it. See, new high. I mean, that'll be our anchor. Still our anchor. We still have a. Whoa, not that. I don't want that. We still have our big loop back D as our anchor. So we do have that as our anchor. Now, we'll go to the low price. We would get something like that as a channel. If we use that last wick low that we just got, and then connect this one, and then this one, because we actually broke it, right? Because price rallied up, dropped, rallied up from the trend line, and then now we've got a couple of candle closes, right? And so we could probably look at this as maybe a demand zone, and maybe that's our target. I'll tell you what, we're getting movement, but I'm not making any money. And there's what we call a stick sandwich there. We have a bearish candle stuck between two bullish ones, and sometimes that acts as our kind of like demand zone in there, somewhere in there, right? And you can see how MACD made just a slightly higher high. This is just really weird. Okay, well, I mean, and the other thing is, if we drop down to a 5 minute, is that we might have had divergence already. And we've already had our three-wave correction against the trend, right? Well, 3, 4, new high 5, A, B, C. Oh, there's that double bottom. A equals C. When I say if you have a double bottom, A, B, C, you want to buy this thing, right? So now, again, we're on a smaller time frame. A, B, C. 1, 2, 3, 4, 5. MACD makes a slightly new high. Yeah, this gets kind of not the most obvious one here. I'd be careful of this. I think it wants to go higher. I would be very, very much careful about that. But they're very interesting. I'd like to see how this one shakes out. I know it's kind of late in the day. I usually don't like taking trades after 11 or 12 or so. I just kind of like took these just, in a paper account here on the trading view, just to kind of like show you this is like what we would possibly do. But you want liquidity. You want to have the banking centers open, a couple of banking centers open. You got nice liquidity, and they get nice fast moves. But, when you got like, I guess New York is going to be closing in a couple of hours. They're kind of winding down their books. And then you're going to have that twilight zone about 5 p.m. Eastern time, 5 to 6, where, or like 4 to 5, U.S. is closed. And then you've got, maybe like Wellington, New Zealand opens up. And hey, I know you're from New Zealand, but there's not a lot of volume in New Zealand. I'm sorry, And then Australia, Sydney opens up. In Tokyo, we get a little bit more volume, and then China kicks in a little bit, and you get a little bit more. But really, the London session is where you get the big fireworks, and where these patterns really play out. The patterns are made of people, and people make patterns. So that's why all this stuff works. So the more people we have in the party, the better this stuff actually works. Okay, with that, guys, we're going to go ahead. There's no further questions in the chat box. I'm going to let you go. We'll see you in the chat room, Skype. Talk to each other, exchange ideas, pop charts in there, use Gyazo links. The Gyazo links are a lot faster to load and upload and stuff like that because and you're not storing files on your computer, which is I'm trying to keep from doing that. Okay, so take care, guys. Cheers. Bye. You're welcome, John. You're welcome, Mike. Bye, Zoltan. Bye, Asha. Bye, Derek. And then you can also find the copy of this will be in the section.